Have you noticed? The crypto market doesn't feel the same anymore. It's no longer just about the believers, the hodlers, and long-term vision. Today, a different force is in charge, shaping prices, volatility, and even how we feel about the market. That force is perpetual futures, or as everyone calls them, Perp. The big question is this change good for crypto, or is it a massive hidden risk waiting to blow up? So, what exactly are perps and why are they so important? Think of them as a way to bet on crypto prices without ever owning the actual coins. You can go long, betting the price will go up, or short, betting it will go down. And crucially, unlike traditional futures, they have no expiration date. This flexibility has made them incredibly popular. In fact, perp trading volumes have completely dwarfed the spot markets, especially for giants like Bitcoin and Ethereum. This means that price discovery, the process of figuring out what an asset is worth, is now happening in the derivatives market, not where people are actually buying and selling the coins. Things like funding rates, leverage, and mass liquidations are now the primary drivers of price action, often more so than any real-world demand. Perps anchored the entire crypto market in three key ways. First is liquidity dominance. The vast majority of trading volume happens in perp markets, making them the ultimate reference point for prices across the board. If you want to know where the market is headed, you look at the perps. Second is institutional preference. Big funds and professional traders absolutely love perps. Why? They're extremely capital efficient, allowing them to take large positions with less money up front, and they are perfect for hedging their portfolios against sudden price swings. Third, and most importantly, is the reflexive behavior they create. Funding rates influence how traders position themselves. This positioning then drives the price, and that new price feeds back into traders' sentiment and positioning, creating powerful, self-reinforcing cycles. In short, crypto prices are now driven more by leverage than by fundamentals. Now, there are some clear upsides to this. Perps bring deep liquidity to the market, which means tighter spreads between buy and sell prices and much faster price discovery. They also provide an essential tool for miners, funds, and even long-term holders to hedge their risk effectively. If a miner is worried about the price of Bitcoin dropping before they can sell their newly mined coins, they can short perps to protect themselves. In many ways, the rise of perps makes crypto look and feel more like a mature, traditional financial market. It's a sign of sophistication and a step toward mainstream acceptance. But we absolutely cannot ignore the risks. The high leverage available in perp markets is a double-edged sword. It amplifies gains, but it also magnifies losses and volatility. This leads to brutal liquidation cascades, where a small price drop triggers forced selling, which pushes the price down further, triggering even more liquidations. This can send prices spiraling far away from their fair value. Often retail traders get caught in these traps with too much leverage, while experienced players can actually profit from these forced liquidations. When derivatives completely dominate the real spot markets, crypto becomes fragile. It starts to feel less like a decentralized financial revolution and more like a giant, leveraged casino driven by synthetic volatility instead of real adoption. So, where does that leave us? Perps now anchor the crypto market, for better and for worse. They bring liquidity, efficiency, and a sense of legitimacy, but they also introduce serious systemic risks that could harm the entire ecosystem. The future of crypto really depends on finding a balance. We need strong spot markets, responsible use of leverage, truly transparent exchanges, and traders who understand the risks they're taking. Perps should be a tool that supports the ecosystem, not the single force that defines it. If you trade perps, or are thinking about it, choosing the right exchange is the most critical decision you'll make. The quality of execution, the depth of liquidity, security, and the platform's risk controls can make all the difference between a good trade and a disaster. To help you out, I've left a link to the best and most reliable crypto derivatives exchange I use in the video description below. Be sure to check it out before you place your next trade. Thanks for watching.